All right, welcome in. Want to take a look at kind of an old school stock today. Charles Schwab, the brokerage. I recall 20 years ago, I was in this business back then, and I do remember this was a growth stock back in the day, back when everybody was buying up all the .com stocks. And obviously, we'll get into the fact that commission fees were higher to trade back then. But let me pop over to a monthly, and I'll just kind of remind you of what this looked like back in the late 90s here, right? Right about the time all the tech stocks were kind of going parabolic. So did this one kind of look the same way? So let's bring it back to the present day, okay? And we're seeing that Schwab is forming a very constructive flat base right here with a peak to trough correction of only 10%, so looking pretty healthy. You see it cleared a double bottom base right over here not too long ago, and it is trading just off those previous highs. So what's going on here, right? So I just brought up the fact that we know as traders, we know that these commission fees have gone away. So what's going on here? How is Schwab making money? You see the revenue growth down here and the earnings growth, and you see great earnings expectations for the next couple of years. So something is happening here that is causing the institutional investors to jump in. Well, one thing is, despite the lack of the trading fees for retail investors, they do have asset management divisions. They do charge fees for assets under management. That's normally a percentage of the assets that a client is holding there. So that's one thing. Also, interest. Okay, and I know we're in a low interest rate environment, but what happens is if you hold cash in your account, then what these brokerages will do, very similar to a bank, they will lend it out and they will get more interest than they're giving you, so they pocket the difference. Okay, that's another way that they are making money. So there are several things going on here. You've also got, with the market appreciation in recent years, the fees for assets under management as a percentage, those have gone up. Okay, so all of that is going into Charles Schwab being renewed here as a stock of interest. You see it's one of these very large caps, 143.76 billion. A lot of shares here in float, a lot of shares outstanding. So highly liquid stock. If you're looking for a large cap, this could be one for your watch list. What I'd be looking for right here, and let's pop over to a daily, take a look. So you've got that previous high over here of 84.49. Kind of you're seeing line here where it's hitting resistance, maybe between 83 and 85. You're looking for it to surpass that at this point. You could also do the other thing here where you draw some kind of trend line. Maybe we take a medium term, kind of connecting three of those points over there. That's a rough trend line, but you can sort of see that you might have a lower entry point, maybe somewhere around 84, as long as you do see that the stock is working on the right side of that base. Right now it's still kind of correcting. It's bouncing along the bottom there. Did not seem to undercut that prior low over here from December 1st. That low of 76.46 right there. But, we're still trending downward again. Could it undercut that? Sure, especially if the broader market begins to trend lower. But as long as you're seeing some blue days here, blue weeks, as the stock is working its way higher, then you might be seeing a sort of lower entry point between 83 and 84. All right, that's a look at Charles Schwab. Thanks for watching.